This is London with VIP Trader. Let's dig into the details on Bitcoin. Hit the like button if you are trading. And we have some important updates. In terms of what Bitcoin is doing. First of all, I want to shout out to our VIP top trade group, number one trade group. Guys, this is London, former hedge fund owner, private, non-SEC, non-financial advice. This morning, you see the drop here right into our indicator on the buy line. I brought this buy line to the VIP this morning on the 5-minute, and take a look at what it did. Down into it, and then boom, ricochet to the upside. Very nice hit. I can expand this just a touch so that you guys can see this hit. It was a nice move. Very, very nicely done. Let's move you guys up there as well. Now, in terms of that, let's go over the details, the residual details. Where are we now? In terms of joining the number one trade group, you're welcome to join. It's easy to join, guys, but you got to want to beat the market. Now, in terms, let me go ahead and see if I can refine this just a bit more. There we go. Now, in terms of the ongoing situation and structure of Bitcoin, two things I want to bring, really three things I want to bring to your attention tonight. Okay, VIP? Guys, I want to bring to your attention the fractal, the micro to the macro. I want to bring to your attention the moving average, and I want to bring to your attention the Bollinger Band. Cool? We'll talk about the fractal, the micro to macro. We'll talk about the moving average, and we'll talk about the Bollinger Band in due course. If you would settle in, relax a bit, I appreciate your patience, including with all the technical. It's almost Christmas time. What's up, guys? Very nice. I hope you're going to buy yourselves some of these monitors so that you can kill the market, guys. Go kill it in the market. That's the idea. Now, what are we going to go over? We're going to go over the fractal. First of all, let's go over fractal theory, practice. When you trade, what is fractal? What is an approach, a proper approach to fractals? What we would say is, and let's say we have a dual, kind of a competing fractal right now. This is important, by the way. I may direct people to this video in the future. We're going to talk about a fractal here, all right? We're going to talk about on the hourly chart. We'll dig into where Bitcoin's going, but your practice, and I thought about this today. If you're not making money in the market, what's the problem? Is it that you don't have someone telling you where the price is going? Not at all. Not at all. The problem is you have not mastered for yourself. You've not mastered, I'd say at least to become consistent, right? You have not become consistent. You're not disciplined enough to become consistent at trading at a lower amount of money right now. And I'm going to say lower amount of money because you're losing money, okay? If you can't make money in the market, you're not consistent yet at a lower amount of money, okay? Get to the lower amount of money first. Become consistent booking positive trades 4 in a row. That's second, okay? First is the lower amount of money. Second, become consistent at booking positive trades 4 in a row. I love when VIP traders tell me I can book 4 trades anytime I want to in a row. You guys got it. That is critically important. So if you're not making money in the market, it's not because, well, I don't have the right indicator. I don't have the right, guys, it's you. You're putting too much money in the market and you're not consistent. Lower the amount and then, guys, become consistent at that lower amount. Then you start to inch up in terms of your exposure in the market. If you want to do it differently, you do it. Come back to me and say, London, my way is better. I just challenge you. I really do, if you want to do that. But I hope that you would receive what I've seen be very, very, very profitable and important for traders, okay? I hope that you can accept that as at least a challenge, guys. Lower amounts of money and become consistent at that lower amount of money. Now, let's talk about the fractal. Let's get into it, okay? That was a little side note that was on my kind of on my chest today. I was like, okay, I really wanted to talk to you guys about that. Now, I want to talk about the fractal approach, the micro. Here we go to the macro, okay? Now, what a fractal will do is it will challenge you to review the patterns. Sometimes, I'll say this sometimes, and this is always kind of the underlying, as we would look at a practice for fractals, right? And by a fractal, I am referring to a micro componentry that is reflective of a macro componentry. You see that? A smaller microcosm, just a small miniaturized version of what we see on the larger scale. A fractal. This would be a fractal, okay? Representative, smaller representation of the overall larger picture. Now, when you approach fractals, what would be the utility in it? What would be the utility in it? I will tell you the analysis, okay? First of all, you're seeing a paired behavior of price, first and foremost. To the extent that you will choose to analyze the ongoing fractal, the smaller portion here, okay, and apply at least your understanding after you have digested this fractal to the macro, right? At least you will be able to apply. And when I say this, a few traders in retail, now VIP are a bit different, you know that, but have, very few traders in retail have everything mastered. They have all the probabilities mastered. They know the whether or not it's bullish, bearish. They know it's whether it's 61% or 65% probability of a throwback or a pullback, guys, or a bullish or bearish. Maybe this one's 71 or 78. Very few retail traders have that just immediately, particularly when we get into the completions, right? Very few traders are going to know right out of the hat, all right, this has a percentage probability, right, of achieving to the downside versus to the upside versus a 50% completion versus a 100% completion. We'll go over that in the back. In terms of the details as you review the information, as you review it, and you're seeing it on the micro, I want you to approach it and apply it to the macro. Very important. We need to go through this tonight so that you see the process. I want you to see the process. I'm going to attempt to bring up VIP Trader. Let's see if I can bring this up quickly. And if we can't bring it up quickly, we may decide to boot the exercise. Let me get in here. I think we can get into this very quickly. So you understand where we're looking at. It's the smaller, the fractal, okay? The smaller pattern in play that is the same as the larger pattern in play. Now, let's take a look at VIP Trader. Let's go into our pattern index. I was testing this all day long for you guys today. Okay, I was testing it today, all day long. All right, it's a good thing. Now, if you go into the visual pattern index on the left, we are going to see all visual patterns. Let's go into all visual patterns. And I may be signed into I think I'm signed into the actual owner account. I'm in the owner account right now, but I think we'll still be able to get into this. But this is where we place all the information so that you guys will have access to it. It's a lot of work. Now, let's take a look at the broadening top versus the broadening bottom. Okay, now this is where we start to run into issue on such an issue. It's a great issue to explore. Now, take a look at this. It's not the easy, quick answer here tonight. Pay attention. As we would look at a broadening top or a broadening bottom, okay, what are the requirements for the broadening top? Okay, here, what are the requirements for the broadening top? Let's see where that went here. Broadening top versus the broadening bottom, okay? Now, we have, it appears a lead in to the upside for the broadening top, appears a lead into the downside for the broadening bottom. Let's see if we can, let me go ahead and do this. Let me go into a different account that is not the management or the owner account, because that one is going to, that admin is going to trip us up. It's not going to mean to, but I want to get to where you guys will be when you log in, okay? And I appreciate your patience. Let's go into, let's go Bitcoin spike. We'll go into this and refresh this information. Now, on the visual index, we're going to be pulling up. You have two options right now. And what is this all about? We're talking about fractals. I'm talking about the correct approach that you would look at, and you would decide, how would I approach this on every trade? It might be like, well, this is boring. It's not telling me where Bitcoin is going right now. I'm trying to give you the approach so that you'll know where and be able to assess properly the strategy behind any fractal on any trade. What's the appropriate approach, right? So let's look at, first of all, the broadening bottom. We'll pull up the broadening bottom formation, the probability sheet on that. There we go. We've got that probability sheet up and running. There we go. Let me make sure that we've got that and good. So broadening bottom is one possibility. Let's go through and see, as you're going to be exploring this, let's go through the broadening top as well. Bam. Now, we have the probabilities. Okay, so in assessing the micro, you're noticing all of a sudden things could get a little bit more complicated, right? You're seeing that you're already digesting more in the marketplace than probably the majority of traders. They may look at that as they may hear it's a clean reversal or it's a clear continuation. You may also incorporate into your Bolkowski work. You may also incorporate into it your Elliott Wave International materials. You know this, right? And that would provide its own potentially independent and kind of a third reference for us to look at. We want to be fully equipped on every trade. So this is the start of the fractal. We have a smaller reference to a larger reference. We're going to be looking at the and let's digest this. What do we have? We have the lead-in to the upside. This is good stuff, guys. I appreciate you sticking with this. We have the lead-in to the upside, right? Copy that. Then we have the drop down into the bottom side. So we have the potential for, just on the surface, to look at broadening top. Leads into the upside. Okay, but we may have a completion to the upside. We'll look at this in terms of bear market, the performance. I want to make sure that you can see that. The bear market performance is literally 49 to 51%, up or down. 49 to 51. That's how equally split this pattern is. And this is looking over the majority, looking over 50% of these, over 150,000, not 50%, but over the 150,000, the 50% of the time we're looking at just a flip of the coin, essentially, in terms of the direction for that broadening top. Now, as you would look at the broadening bottoms, this is different. The broadening bottom is different. This is a key critical function. As we would look at the breakout direction of a broadening bottom, okay, as we would look at this, all of a sudden we're seeing this is a 60-40 split. 60% probability of moving to the upside. That's important. That's a lot different. The 60-40 split we like a lot. The 50-50 split we want to stay away. Copy that. So as we look into the lead in to the downside here, we have a bit of advantage. I told you guys last night and yesterday, I was like, we're in a bullish pattern for this pattern and some other patterns that we won't go over the specifics on right now. So as you're looking at this pattern and you're looking at the fractal, what have we already done? Now I can go through the percentage reaching half height, full height, right, of the pattern. The actual target to the upside, is it going to repeat the amplitude or not, based upon the percentages, right? Based upon the probabilities, okay? 150,000 plus patterns went into Bolkowski's work. I'm excited to bring you guys very soon this website. Been testing it all day, trying to get it ready for you guys. So looking at that, we've already identified one issue here. We've already identified one issue, and a comparative, as you would look at the fractal here, it's drawn your attention from the smaller pattern to the larger pattern. We have a trade dynamic in play that has immediately thrown this into a different approach than if you would have just looked at it and said, well, I'm going to trade a breakout. That's fine. I'm just going to trade a breakout. Are you trading against the probabilities, right? That micro in this instance, and this is somewhat rare, right? Because we have the same, essentially the same structure here, but we have a difference in terms of whether or not it's a continuation, right? That would continue to the upside, which is a 50-50 chance, right? That's not a real, as we look at this, that's not a super strong chance in terms of something we would just want to, let's put the farm on that one, right? No, guys. You understand, we don't like the 50-50. We like some convincing patterns. As we look at this specific pattern here, yeah, we have a bit of an advantage. That 60-40, we like that. Now, you can dig into it. BIP, you'll dig into the targets to the upside, et cetera. But this is one great example, crack your knuckles out, on the difference between a broadening top and a broadening bottom. Very interesting, very, very interesting. So, as we would look at this as an example, the additional, advantage of something like a fractal would be the following. And I hope you guys are receiving this well. I hope you're doing well. Yeah, I hope you're chilling out, relaxing, throw some music on. You're like, London wants to talk for a bit. You got it. You got it. Now, the second issue that we are dealing with right now is an interesting one on a fractal basis. I want you guys to pay attention, okay? Right now, the market is assessing something very important on a fractal basis. And what it is the following. And this is another way that fractals can prepare you as you deal with an issue on the smaller time frames normally, right? But on the micro patterning. What this fractal is also doing, the micro patterning, and I want you to look at this very carefully. This is the edge on the market. These are the types of analytics that you'll go through as a trader, and it will increase your game. Like I said, if you're not consistent yet, just keep trading at those lower, I said the lower time frames and the lower amount of money for sure. Lower time frames gives you more trades, but lower amount of money, without a doubt, until you become consistent. Our 100 rounds, guys, it's a beautiful program. It's a nice training technique. I've seen incredible results of people on 100 rounds. Don't even ask. It's been nice. So the second thing, as we look at a fractal, I want you to get very good at, and you will get better at the issue. And I'm just going to draw this. It's imperfect, but right now I'm going to draw this. I'm going to draw this here, okay? In terms of this specific move, and I could align it in. I'll do a rough, let me say a rough alignment here, and it is a rough alignment. But I'm interested in this here, and I can line this up. Let's go to, and that's close. That's close to what I'm looking at. The key identifier here for me is the following, and I can just do this. We have a bit of a differential here in terms of the fractal, but what I'm most concerned of, and I've drawn this with the parallel channel. What I'm really concerned with is this detail in here. You see this detail? The level of resistance, a strong tendency of price just to knock into a level of resistance across the top. I see that repeated here, okay? Now, you can see on the fractal basis, you can see to the right-hand side, okay? And it's strong enough, I'll tell you this, it's strong enough that the top traders who are doing the comparative analytic and the fractal work, getting the advantage, expanding it to the macro, right? And as you do that, you're going to be preparing yourself for the probabilities. And this situation, with the difference in the broadening top versus bottom, those different probabilities, you're also going to be potentially preparing yourself for, like, what is the message that the market could be sending you right now? If the market were trying to send you a message, let's see what that message would be here. Let's look into this smaller, let's say, instance of price knocking up along this level of resistance here. You see that clearly. Now, we're in a bullish pattern, right? We noted that in terms of the probabilities, we're in a bullish pattern. Looking at that level of resistance, however, the question is immediately, okay, are we likely to go back down along for a journey? And this is nicely seen on, this is the one that caught my eye earlier, that 4-hourly. Take a look at that 4-hourly. That's where we saw that descending wedge. Gave a heck of a nice rebound, Bitcoin spike, wedge tactics, beautifully well done. So looking at the framework here, what's the question? Well, the market wants to know right now on the micro, on the 4-hourly, the market wants to know, are we going to return back to the level of resistance? You see, are we going to return back to this level of resistance for a hit? That's a fractal, it's a micro. Let's look at this. Hold on. We just answered that question right here. You're going to ask yourself as you look at the fractal, am I prepared for a hit back down to that level of resistance on this pattern framework? And remember, what the shared feature here is this grinding into a level of resistance. We've got the same thing here, the grinding into that level of resistance. So as you would contemplate a return on the fractal here in this zone, make sure that you're prepared to operate at that level. That's the fractal, that's the micro. You're also going to launch into the dynamic on the larger componentry to say, wait, if I need to be ready, this is all about preparation, this is all about tactic. I need to be ready on this micro. Okay, I'm willing to be ready on the micro, but hold on. What about on the macro? You see, as the market is showing the traders that it needs to, let's say that that it does in fact, and it need not to the undeveloped trader. But as you see the flare go off here on the micro, literally a warning flare, just to let you know, are you prepared to operate at that lower level of prior resistance to flip to support? Yes, the extrapolation, yes, that application of the smaller pattern to the larger pattern. This is part of fractal work. Okay, so when we're addressing this, it may bring up differences between where you're at, where let's say between the micro and the macro, a different probability. It may adjust your thinking, but it's bringing your attention on the micro. You get it, guys? On the micro, let's say that first, and so I should probably say it's an opportunity to do the research, to build your trade knowledge in terms of what you're looking at, right? To gear up in terms of that technical analytic and do the proper legwork on the trade to bring, for instance, that broadening bottom versus the top, right? It's an opportunity to dig in. You know, it's being brought to your attention in my book. It's really being brought to your attention the way I see it for a reason. If you're looking at something on the micro, don't look at it in a vacuum. Don't. Ask yourself, what is the application from the smallest thing I'm looking at? And guys, we're looking at the 4 hourly to the micro to the macro. You can do this on the 3 minute, on the 1 minute. You can do this on the 15 second. That normally drives people away, but when you start to see the number of patterns, when you see the shared dynamics here, level of resistance, yeah, okay, return, right? A return move to level of resistance. Okay, we still have this level of resistance. Return move. Now, when I tell you in the back, orders are waiting at this level, okay? It's a prior level of resistance to potentially confirm as support. It doesn't mean it's 100% going there. We have those probabilities at work. You know that. There's a throwback probability that we would look at here, right? Same thing here, guys. As we would look at this as well, we would be exploring a throwback to that prior resistance. So the micro, beautifully reflective of the macro on this situation. And a bit of a distinction you see between this, I'd say the first example that we went over. Let's just kind of revisit that first example with a potential bottoming formation there, broadening bottom versus the top, right? Very important, very, very important that we would look at that, the continuation feature. You're learning, as you look at the fractal, applying it from the micro to the macro, you're learning a lot about TA. Hey, you're digesting that information. You're learning about the probabilities, all the good stuff. And VIP is always there to help. And I did think about that. We deal with the probability sheet so much, it may eliminate the need for you to really commit it to memory. No problem. If you guys are in the back, you got it right here all the time, no problem. That'll actually help you learn it 100%, guys. It'll help you learn it and have it just immediately available. So such is the fractal, all right? Invitation to up your game is what I'm going to say, okay? So you see the different applications. We can rework this and that in terms of the verbiage, but I like what we covered. I like the distinction, delving into probabilities, both on on every move from, I'd say on every aspect, from not only the pattern break direction to the upside or the downside, but also those completions, right? What are the completions on a broadening top? What are those percentages to the downside? Are you prepared to operate at that level? As you would look at the broadening top, you're noticing, first of all, a conflict between the broadening bottom, which is included. We don't have confirmation, right? So that's interesting. We don't have that confirmation. But also there's going to be, on the likelihood of the break down, there's going to be a confluence here. I know this is a lot, guys, but pay attention. There's going to be a confluence or an overlap between the percentage movement to the downside, probability, and the specific move that would take you back down to that prior level. Let me go ahead and rewind this. That percentage move to the, let's say, probability to the downside in that measurement that would land you on this line. Okay? So you see how the analysis here, this starts to become very interesting for traders who are able to do this comparative analytic on the fractal micro to macro and say, yes, okay, I understand. There's going to be a percentage, as we would go down to this, there's going to be some confluence here. And let's go ahead and measure this out. Kind of an advanced technique, but I know that you can learn how to do this. Bottom line, this is a quick draw. I'm going to tell you a quick draw. I would spend a lot of time detailing this out for the VIP. Click high to low, boom. Okay, so this would put us down. This would be the 100% movement to the downside. All right, that would be the 100% movement to the downside. Where would it catch in terms of the specific line of resistance? Where would it catch? That was a quick draw right at the golden pocket. Can you see that? That's 65%. Let me dig into this. You see that 65. There we go. That 65% right here, there we go, is right on that line. Okay? So that is the golden ratio. That is that ratio that all things like to gravitate towards. And it's nice to see it in this regard. Very nicely done, huh? That's fractal work, guys. So up your fractal game. Start experimenting with it. Start working with it. Make it a part of your trade practice, and let me know if you guys, how you're developing on that. It'll be reflective in your trades and your peace of mind, being prepared for lower levels. We're in those lower levels, right? Now, and we would say that's between the 50, just so that we know that 65% would be between, this is on the, that's the broadening top, okay? That would be between with the 50-50 likelihood of a breakout to the downside, 50-50 chance, right? That would be not quite to the, let's see, a bear market up breakout. Let's see, a bear market down breakout. Only 46% of the time. Only 46% of the time are you going to reach the full height target down and through that level of resistance. Wow, huh? Did you guys catch that, huh? Only 46% of the time? Huh, not bad. This is what comparative analytics, this is what fractal will get you into. This is nice. This is very, very nice. Do you see that? That's a great thing to cover. Only 46% of the time are we going to get down to 15.5. Now, when I say that, what are the traders right now immediately doing? They're looking for other patterns. They're like, okay, that's a likelihood of only 46%. This is how you build an argument essentially for your trades. It's very rarely a straightforward pitch that the World Series champ is just going to lob up over underhanded for you to hit the Grand Slam and win the championship. Very rarely, huh? Is it that underhand? Very easy. Just wait at the plate and you just crack it out for a Grand Slam. It's going to be the best curveball, fastball pitch. It's going to move more than you can imagine. That's the difference between the pros. The pros can still dig in and they're ready to hit the home run. So just be prepared as we're delving into the analytics here. I know a lot of you, this excites you. This is good stuff. I was like, okay, there's a 46% of going to that level. What else would need to happen to increase that percentage or to eliminate that percentage or to lower that percentage? Good stuff, good stuff, good stuff. We'll be dealing with those issues in 2023. Yeah, big time. Now, let's dig into more in terms of this video. It's going to be a while. That's okay, guys. Some of you need to develop, huh? Some of you need to develop. Some of you are new VIP. I'm excited about that. We got some new players in the house, without a doubt. Appreciate you guys being in my trade group. I'm a trade member too, guys. I'm a VIP with you. Okay, I'm a paying member with you. Yo. Now, in terms of that, guys, I gotta say, former hedge fund owner, private, non-SEC, not financial advice. You guys got that right. Now, in terms of the details, I got good stories about hedge fund. I'll bring it. We'll stream over the over the holidays here. Okay, we'll do some streams over the holidays. Get everybody in the Christmas spirit, whatever you Hanukkah, whatever you got going on. Whatever else you guys got going on out there, we'll stream on it. Okay, we'll have a good time. Yeah. So now, what's the next thing we're gonna do? The next thing we're gonna do is going to be talk about the moving averages. Moving averages. Hey, moving averages. We can do that. Now, moving averages. The 5 over the 20. Hey, or the 4 over the 19. Or hey, I want to look at resistance and support of the 100 and the 200. Hey. That's enough. Huh? That's enough. What's the best moving average? Well, the MACD, we got 12, 26, and the 9 differentiated. Don't worry about it. Listen. When you pick a plan of attack, you need to test your plan of attack. The 5 and the 20 are scoped out by the New York Institute of Finance. Verbatim, literally, the 5 and the 20 directly pinpointed as being attractive and being favored by futures traders. That's what we do. We trade leverage, right? You guys got that? So the New York Institute of Finance, where Wall Street pros go to school, they're literally saying the 5 and the 20. When they get in an argument in and around, guys, if they get in an argument at their trade desk, they got, say, 10 to 15 people at a trade desk, they're all trading everything else. It's like, what moving average are you using? What are we still using it? What are they going to do? They're going to go get Murphy. They're going to go get the technical analysis of the financial markets book and be like, no, it's the 5 and the 20. I'm not going to tell you they're going to do that. I just know a lot of guys who honestly have literally used that. They call it they make some funny names about what that book is because it's the answer. It is. If there's a dispute, you go get the book. That's it. And really pertaining to Murphy's first book, the futures, technical analysis of the commodities, futures, markets, et cetera. So the one I cut my teeth on when I was younger. So in terms of that, the 5 and the 20. Now you know how to do this. Go up into your indicators. Add the moving average ribbon. It's a built-in indicator, very easy. Moving average ribbon. I want you just to select the first two, deselect these, and click 5 and 20. Just give this a chance for a minute, okay? I want to prove a point here on the 5 and the 20. On the 5 and the 20, the important component here is the crossover or the cross under of the fast moving average, meaning the 5, meaning it's taking an average over a period of 5. If it's 5 days, 5 hours, whatever it is, stacked on each side of the average, it's literally only counting 5 total periods. It's a fast-moving average, okay? The 20 is a longer, slower-moving average. So the 20 is going to be in red. You know that because it's less reactive. It moves slower. The 5 is very, very close to the price action. So that white line is going to be, and you can change the colors, the thickness, everything you want. But the white line is going to be your signal for an exit in the market, okay? Here, that was a nice signal. However, and this is what I want to go over in terms of your moving averages. However, yes, it was a great signal for a short here, but what happened? And I want to focus on this. I want to reinforce this with you. You better be, please, I just say please, okay? Be prepared. I won't say you better. I don't like that. I got something to tell you. No. Please be prepared for a throwback, pullback towards this specific, and I will say towards the slower moving average. Whichever one of them is further out, when it gives you this signal to short, just be prepared. It could whipsaw back up against the traders. It wouldn't be the market otherwise, would it, huh? Giving a specific, you guys know that, giving a specific short indication. This is New York Institute of Finance stuff, guys. You know this, huh? You guys read that section. I brought it to the VIP a couple days ago. If you're not VIP, I don't know why. Guys, if you want to beat the market, you gotta be VIP, bottom line. So the same would go true for operation up and over let's say the short. Let me make sure that I'm on in terms of the charts. There we go. The same is going to hold true in terms of the operation of the average up and over, okay? And let's say the 5 over the 20. Be prepared for any type of a challenge back into the moving average. Just please. That's going to be, as we focus more on moving averages, because you can get whipsawed very heavily. Some of the lower time frames, you'll definitely see this on some lower time frames where a specific, and the lower time frames, the issue is this. With the lower time frames, you need to be prepared generally for more whipsaws, more false signals on the lower time frames. New York Institute of Finance will discuss all of this, okay? That's the benefit of a larger set of moving averages. The 5 and the 20, as we would look at it on, even as we go into smaller time frames, the advantage is you would get more trades, but the disadvantage is that you would get more whipsaws. So build that into your leveled approach at trading. Work on that discipline. The smaller time frames are great because you'll get more action if you choose to start trading the 5 and the 20. We're going to be incorporating that into VIP Trader. It's a New York Institute of Finance methodology, recognized trade tactic, and so we're going to be focused on that. Okay, and just always remember that when you get the signal to the downside or to the upside, the bull or the bear, and you may find a time frame that works wonderfully well in terms of, well, the last 8 signals have been perfect. They haven't had a whipsaw. Hey, if you traded those or you're continuing to trade based on that back testing strategy, beautiful. If you love that time frame and you found a gem, go with it. That's beautiful, right? So that would be that's really, in terms of a brief setup, the 5 and the 20, and in terms of the being prepared for that move against you. Again, never overexposed in any one trade. We like, guys, if you're trading on 100X, we love, 1/100th is a trade amount. 1/100th of a comfortably expendable amount of cash on each trade. And that never changes. It's not like, well, I'm going to spend 1/100th today, and if I lose tomorrow, it's going to be uncomfortable. No, you're not getting it until you become consistent. You've got to be able to relax, enjoy your trades, let them float a bit, work on your ability to put in stop losses, et cetera, et cetera. So be prepared for those whipsaws, okay, as you look at the 5 and the immediate signal that you want. Sometimes it's a beautiful signal. Boom, nice move. Now, we caught that on Fire and Ice. A lot of these, you're going to find that Fire and Ice is catching them. Again, though, this is something you'd want to incorporate into your Fire and Ice, into the indicator, right? Without a doubt. Now, we covered that briefly. The fractal was a little bit more interesting. Now, that's a closed book right now in terms of the point that I wanted to prove, though. Just be prepared for whipsaws, and I want to make sure that you understand that as we get into trading the 5 and the 20. We haven't really been doing that, so we're going to start getting into that framework a bit. Now, let's talk about the Bollinger Bands. That was the last thing I wanted to talk about, right? Yeah, okay. Now, the Bollinger Bands, I'm just going to do this for you guys, because I know you're still, a lot of you guys are still watching. I appreciate that. I hope you appreciate me trying to bring you guys good stuff, right? Now, the Bollinger Bands, you understand the tactic, right? You understand that what I'm going to say right now is I want you to read New York Institute of Finance, but essentially they're going to tell you once price crosses the specific 20 moving average on the Bollinger Band. And what's the Bollinger Band? It is a measure of standard deviation. That's it. It's a measure of standard deviation, okay, away from price. Okay, 95% of the price action falls within the bands. That's nice. It doesn't mean it cannot rifle up and into the bands and continue. It can, absolutely. It's not always a reversal. Sometimes it operates as a continuation. But as we would look at this, the hit onto the band, what I'm going to discuss now, and it's relevant to the extent that we are looking at targets to the upside or the downside on Bitcoin. It's going to be difficult to beat this strategy. You know this, as we always cut tape, and do we know exactly where it's going or when it's going? How do I prepare you, let's say, for a technical approach and discussion? Well, for something that lasts in terms of a video, I remind you to look at that moving average, the 20 moving average, right? Okay, right now, the critical level is the 8 hourly. Note such, as you're looking at the 8 hourly, it's been very instrumental in a few big moves. Remind yourselves that we're currently challenging, for instance, the 4 hourly. Once you see, and pay attention to this, once you see a target hit, it may not be uncommon, okay, for traders to stack orders along the moving average. It may be very common, depending on the time frame, that the orders would stack traders would stack the orders along the 20 moving average. Now, we will likely have on our indicator, Fire and Ice, we will likely have a level there in terms of a buy level on one of the time frames. But that's a tool that you can use to find some confluence between Fire and Ice and the Bollinger. We like that a lot because that's going to essentially mean that you've got a trend line somewhere. That trend line, that's how Fire and Ice is built, okay? The green bylines are trend lines somewhere in the equation. They're a trend line the vast majority of the time. So as you would look at that, you would be able to say, okay, so we have a trend line. You'd want to say on what time frame, okay? You'd want to start assessing that as you look at your different time frames. You'll all reach a level of sophistication, I believe, with that Fire and Ice and your Bollingers and the 20 moving average, etc., that it's going to be a sweet 2023 big time. Now, let's see if we have that 8 hourly is the most impressive and attractive feature currently ongoing in terms of the Bollinger Band. It just is. The daily is not far behind, all right? We came up into and hit the 20. We're not far from the daily, but I'll just tell you, in order to, and we'll look at MACD later, okay, another deal, but in order to have an upside target, I'm just going to tell you, for the Bollinger Band tactical traders, we need to be up and over that 20. Easier on the smaller time frames, right? But when the daily and the 8 hourly come into play, we start paying attention, right? Now, we may trade something like the 15-minute frequently. You see that nice crawl up over the 15 minutes. I say this, and I want this to resonate. As I brought this this specific, let's say, pattern in the back to the VIP tonight. I brought this specific pattern in the back to the VIP tonight. The bell, right? We rocked it to the upside. Smaller bell formation, but it rocked to the upside. Bitcoin or no asset, commodity otherwise, is going to make a big move without doing what first? This is one of the biggest points. Is people want to know, is it going to go up or is it going to go down? I tell you, you can't predict what's going to happen in terms of warfare all the time. You can't predict in terms of what's going to happen in terms of politics. The unknowns in life affect the market. That's why we love the market, right? We like to be prepared. We like to be the ones on the market ready. I'll tell you this, a big move's never going to happen in Bitcoin or anything else you're trading without price crossing the five in terms of time frame, the 5 minute, okay, 20 moving average. It's just not, okay? Understand, when you want to know what direction something's going, dig into your 5 minute time frame. Look at whether or not you're over or under the 20 moving average, because there are traders at a reasonably organized, I'd say to a reasonably organized degree, there are traders who are focused on the 5 minute at least, who are literally assessing whether or not there's an upside target or a downside target. That's it. So as you're looking for your trades to be relevant for you to participate in the right direction in the market, I just tell you, that 5 minute is going to be the litmus test. That's going to be your starting block. And if you wanted to, the one thing I would say, if you wanted to start at a larger block, if you wanted to start at the daily, okay, and work your way down to, if you have the time, if you're immediately pressed to get into or out of the trade, say you're catching up very quickly, I'd flash into that 5 minute or a lower time frame, and then make sure that you do work your way down from macro to micro, okay? And that would be relevant with New York Institute of Finance. I believe you'll find that as well. I know you will with their materials that Wall Street focuses on. Making sure you have an understanding of the big picture. I have all the way on these charts. I have from the monthly, weekly, I have the daily, I have the 8 hourly, right? I've got you guys, and I have time frames behind that, the hourly, 4 hourly. I have the 30 minute, 15 minutes, and then we've got over here the 5 minute, 3 minute, and I've got a 1 minute flip behind my, just so that you know, we've got the Bollinger Bands of the multi-time frames here. We've got RSI here. I've got another indicator here behind this. I've got the, and I think this one's MACD in this zone here, just so that you know what I'm looking at. We've got the 100 and 200 moving averages up in this zone. And then I have a corner laid out for Doge. That's the bottom line. I do. I have a corner laid out for Dogecoin because I'm like, I know they were going to want to catch the next move. We got some guys back there, and it's not always Doge up there, but I'm trying to make sure you guys aren't. We got some traders that like to trade Doge. I think Elon likes to trade Doge too, so hey, that's just what we can say about it. And we're looking forward to 2022, 2023. Let's say the conclusion of 2022. It's been an incredible year. We've been building. I know that you guys get get excited and get kind of worn out, and it's just part of the market. But I know you're persistent, you're awesome. Some of you have time to listen to this. Some of you are at work. If you're at work over the holidays, hey, maybe I just made this for you. And I hope that you guys are doing well in everything that you're doing with your families, with your friends, with everything that's going on in your life, and that you're looking towards an incredible 2023. I'll invite everybody to join our group. If you want to beat the market, that's the only requirement, without a doubt. And in terms of hard work and dedication and building, you're not going to find anything better than what we're putting together. I'm building with Venus this year. Venus, shout out. It's been incredible to build with you, and we're redefining what's going to be possible for a trade group without a doubt. I know this, and I'm really excited about setting that mark. This link here will allow you to join. Once you join, either from there or from a desktop computer, I want you to hit into the first pinned tweet, put I am VIP. Let me know you're VIP. And that will put you in touch with me, and I will get you in the back with our specific, taking a look at this, with our specific indicators, with our signals, with our group. And here's another rock the bell to the upside. Boom. Nicely done to the upside. Very nicely done. That pattern formation, that bell formation, that momentum move. Yeah, we got another one tonight. That's 2 nights in a row that we've streamed, that I brought content. I'll say that I have brought content. And in bringing that content on both of the occasions, we had just come out of a bell pattern formation. You see why we trade them? Absolutely, without a doubt. Now, this is London. Appreciate all of your time, and we'll do some streams over the holidays, but this was just a bit of the information that was on my mind, making sure that you guys get this. Make sure you're watching this on a big screen TV. And we got 4K live coming at you guys very soon, live streaming 4K. We'll talk to you soon, guys. Thanks so much for your time. Bye-bye. And this is London, former hedge fund owner, private non-SEC, not financial advice. We'll talk to you soon. Bye-bye.